Good morning, guys. All right, let's get started. We had some wild swings in the local market and S&P yesterday after the ADP employment figures came out a lot better than expected. Seems that traders still don't really know whether they want good news or bad news. We had a initial sell-off, then the S&P jumped dramatically and sold off a little bit in the end. The Fed released its beige book, which pointed to modest to moderate expansion in the economy. It also mentioned that price inflation is contained and that residential real estate improved across many districts. Okay, Asian markets mostly in the red, just on the back of that ADP number. The Standard Chartered also, which has a lot of exposure to emerging markets, slumped to a 3-month low in Hong Kong after a profit warning. So there we see Hang Seng down, Shanghai down, Kospi flat, Aussie down quite a bit, and Nikkei down just under 1%. If we look at other stocks trading in Asia that affect South Africa, I think Tencent was up, if I'm not mistaken, about 1.4%. And Billy's was up when I saw this when I looked early this morning, but it's come off and it's ended negative. No real corporate action today, and if we look at key factors, 2 o'clock we got Bank of England rate 2.45, ECB announces rates. Fed Lockhart speaks on the economy in the US at 3:15. At 3:30 we've got Draghi, which holds a press conference after the rate decision. That'll sometimes move markets. We can keep an eye on that. 3:30 initial jobless claims, which is obviously a big one. GDP annualized quarter on quarter, also 3:30. 5 o'clock we got factory orders out of the States, and Fed Fisher speaks on the economy at 7:15 this evening. All right, let's see what's happening in the charts. The first one I'm going to show is the FTSE. The FTSE is getting down to quite an interesting level here. If we zoom out a little bit to a 2-year, you can see we've been forming this large consolidation over the last sort of year. If we zoom in there, we're approaching some pretty significant support out of this symmetric triangle that we broke out of a little while ago. So definitely entering a zone along with the 200-day moving average. I think if we get a reversal off this zone, it could be quite bullish to resume the uptrend. As I say, we have broken out of this triangle a little while ago and have been pulling back to support on this recent pullback. So a reversal of current levels could be an indication to start getting long. And obviously the FTSE influences our market quite a bit, seeing that a lot of our big dual listers trade there as well. Let's have a look at the Aussie quickly. Okay, so yesterday we looked at this major level, the previous low from a week ago, and we were saying that if we get a close below the Monday's low, we could resume the downtrend. Yesterday we pretty much closed flat. So we're going to look for some more confirmation today. If we get close below these levels, there definitely could be some follow through to the downside. Levels we looked at yesterday again, 38,850, a reasonable support level. This also happens to be S2 on the weekly pivots for those guys that follow pivots, and then the other level at 38,400, and we'll call it 38,400 to round it off. Those I'd say would be the immediate short-term levels to be looking out for: 38,850 and 38,400. All right, let's have a look at Billy's quickly. Billy's actually traded really well in the UK despite a lot of pressure over the last couple of days. If we have a look at let's just zoom out. We had this big sort of breakout from this, I would call it double bottom kind of formation, continuation formation. But we've been flagging since then. We had a bit of a false break, came back, and yesterday we had a nice big up day again. Let's just move this line over here. Let's look for a close above 311 for a continuation of this uptrend. If we fail at this resistance line, then they would look for another retest of 300. but definitely one of the commodities that I'd be looking to buy if we feel like this sell-off is going to turn around. Sanlam. Yesterday we had some crazy action in Sanlam. They came out with a trading statement. Initially it looked good. They took it up and then sold it hard off into the close, obviously exacerbated by the general market sell-off as well. Let's have a look at some support lines for Sanlam coming in right on. It actually tested that line yesterday and closed just above it. So we're looking at a bit of a symmetrical triangle here that we broke out of, pulling back pretty much to test support. Very good. I would say it's a great place to enter if we get a reversal of current levels. Show a little bit of strength from here, so let's just quantify that level around 49.20. Could be in 48.70 on the downward sloping trend line. So around this level between 48.70 and 49.20, good place to enter into Sanlam if we get to see a little bit of strength from those levels. INP, Investec, broke out from a symmetrical triangle a little while ago. It's been flagging since then. Looks like it's actually been holding up reasonably well despite the recent pullback. We had a breakout from the flag that has been moving, above support, and we had a nice breakout so about a week ago, and it's been pulling back since then. Look for a reversal of this current level. If we can hold sort of 69.60 and show a little bit of strength in the coming week off that level, that could be a great opportunity to buy, to go retest highs and possibly make new highs in INP. It's obviously being helped by the weaker rand as well. And the last one I wanted to show is Grindrod. This has definitely been one of the best performers of the year, and it continues to outperform. Broke out a couple of days ago, and over the recent weakness in the market, it's actually just been moving sideways. And I would say, once the market gives it a chance, it's going to continue to move upwards to reach short-term targets of around 27.5. And that's all for today, guys. Good luck.